I'm still waiting on the full video or the full
The
music.
full
By
song.
the way,
You know what? If
guys,
you get it to the point where I can hear it, I will make the whole song for you. That's a
I
promise.
I can't do that.
Then I
I
can't
don't.
do the song. I'm sorry.
I can't control StreamYard. Guys, we're going to be left with a little bit of a clip of Steve playing guitar because he's too lazy to play guitar for us now.
For the whole band. Yes, yes, yes.
Um, guys, we are going to be talking mortgage rates today because there's a lot going on. And at the end of the day, does it really matter? Because I heard a very interesting talking point today that we're going to chat through on mortgage rates. We are going to talk about a couple of things beyond that. I'm not going to give those away yet, but I'm Chris. I'm a real estate broker outside of Austin, Texas, and Dripping Springs, Texas. That guy's Steve. He's a mortgage loan originator with Motto Mortgage, also right outside of Austin, Texas, in Lago Vista, Texas. That means Lakeview. Um, it actually does.
Does,
I,
yeah.
I speak a little Spanish. But it's Monday. It's 5 o'clock. My friend, are you having an adult beverage today?
You know, I am. I am, sir.
Interesting.
Went camping this weekend and
Oh, you're
had some
putting the RV out?
leftover Modelo's.
Not terrible. Not terrible. You know what I really like? Modelo Negros. I like their black lager. It's
You know,
good.
you're
I am.
a dark beer fan, aren't you?
I am. And I'm not giant on lagers, and I'm not giant on pilsners and stuff like that. But those dark lagers, I like. So
See,
anyway,
I think someone needs to come out with like a 2% alcohol beer. And I would just drink that all day,
I'm
and
pretty
it
sure
would be.
that's Michelob Ultra.
I don't think so. I don't
No,
think so. We need to have something to like look stuff up on. I need to do this on a
we really
camera, not
do.
my
I mean, you
computer or
would
not
think
my
we
cell phone.
Google or something. Do you have a laptop?
I'd love to look
Um,
it up. Yeah, I can't do it.
my friend, I am still drinking Evan Williams. Cheers.
It's
Bottled in bond, 2 cubes of ice.
excellent, excellent.
Oh, man,
So let's talk.
let's jump. Wait, you wanted me to remind you about 50%. Do I do that now
Yeah,
or
I would
later?
love to do that right now, please.
Let's do it. 50%.
So,
I get a text from this guy says, "Remind me of 50%. I know what I know what you'll be talking about."
all right.
Okay, go for it.
Chris and I went to see an economic specialist
Yeah.
a few years ago. Not few, actually. It was more like how
Was
long
it
ago was
last
that?
year? It might have been a year
It
ago.
was at least a year,
Yeah, maybe
I
two.
believe, maybe more than a year. But he was
Anyway,
predicting. I think it was more than a year. But either way, he was predicting that we were about to see the biggest first-time homebuyer market in the history of first-time homebuyers, and that it would start somewhere around the year 2025.
yep.
I specifically remember him telling me this because I used to specialize in first-time homebuyers. Right now, it's not a specialty anymore. I still certainly do it, but
Yeah.
I've moved on to other things too. Right, but long story short, is that I was watching a video this morning from Matt Ishba, who is or Ishbia, who is the CEO of United Wholesale Mortgage. He puts out updates about the market every now and then, and I love to keep stay informed. And he throws out this, and 50% of all purchases are first-time homebuyers stat. And
Come on.
I just couldn't believe it, which is usually somewhere around 30, 32%,
Yeah,
not 50.
yeah.
So,
It's like a
so
third of the market.
we were told it would happen, and all of a sudden, so
And y'all, the guy he's talking about is Mark Sprague. Mark is a data analyst, a real estate data analyst, and he works with Independence Title. That's how I got the introduction and how we introduced Steve to him.
it's a
And
great
the
meeting.
guy, he's been in Austin forever. He's a real estate developer and really, really an intelligent guy. And when you hear a prediction like that, and you're like, "Wait, what the hell are you talking about?" Because prices are going up, and it was after the boom of COVID, so prices were through the roof. And hell, you and I on this show 2 weeks ago were talking, about our first time home buyers screwed. Evidently not.
Well, we didn't say they weren't screwed, but if they're going to show up in droves, it's part of the reason he was telling us that they were going to be there was that they'd have more purchasing power than any other generation in history, and not
Yeah,
just because of inflation, but by percentages.
percentages. Yeah,
Um, but he says that, and then we're all afraid of AI taking our jobs, right? So, at the end of the day, man, I already know AI is making a huge impact. I know several people that have fired employees and have AI do what the employees used to do.
Yep.
Um, so it's happening now, but who knows?
I do know one other, and I saw this last week, and I was just reminded of it when you said that. First time home buyer, the is it the average or the median? One of the two ages of first time home buyers is up to 38 years old, I believe.
It's higher
So
now.
this
I
is
saw
so high.
32, but yeah, it used to be like 28 or something. Yeah.
Yeah, it's up significantly, which is interesting, right? I mean, but I guess if you're waiting that long to buy your first house, you're more economically secure than you would be at 28. So, okay, a big boom right now for first time home buyers. Sure.
You know just as well as I do that it's the price.
It is. It is. Uh, but again, man, even in Austin, everybody Austin's overpriced. You can find a ton of first-time homebuyer houses here. We've talked through what the numbers are and what you have to make and all this other stuff. And a couple making close to, what did we figure out? 95,000 a year can afford like 350 or 400, and there's a ton of those houses, even brand new ones around Austin. You're not
I
going to
don't think
live.
that's exactly what we figured out, but
It was close.
we figured out that most people, if there's a couple involved, most couples are able to buy a home, and that many single people still can. But it is harder. It has become a little more difficult.
It has. But let's get into what we're supposed to be talking about today. Where's my share screen? Let's get after this because we're talking mortgage rates. First screen that I've got up, guys, is Mortgage News Daily. We like this because they give a range of rates because we know that there is not a rate, thanks to our buddy Steve. There's a range of rates based on your credit worthiness. But
And the
this,
lender. Not all
this
lenders are created equal.
that's fair. This is a snapshot of today. This is where the rates are falling. 30-year fixed. They've seen from 6.1 to 7.52. Okay, average 6.75. That's a lot better than it's been in a little bit, in a couple of months at least. And there's average FHA rate right now 6.13. That's not bad, man. That's not horrible. So
No, I mean when I was in my God, I remember going out on my own, and when I did, rates got up to about 5.5% at one point, and some people were coming out of there with 7% rates if you're an investment and low credit score, and that was okay.
yeah,
Then we have today, and somewhere between there and then, people just lost it. Also, the prices of the house have skyrocketed, so that doesn't help either.
you know what I've never done? Let me poke in 500,000 here just to see. Doesn't really change the rates. I know there's a lot of things that go
Changes
into
the
it.
payment. It
Yeah,
shows you what the
change.
payment would be at that
Yeah,
rate.
yeah.
It does not
Uh,
show taxes and insurance.
correct. That's principal
Uh,
and interest only. Yeah, yeah.
Mortgage
Uh,
insurance. It's not. Yeah, a lot is lacking.
but it's interesting, right? Rates
Oh
are
yeah.
coming down, and we wanted to talk about this. And you can see right here towards the end of the graph, it drops. Guys, that high point right there is January 6th. No, sorry, January 13th. And since January 13th, we've been dropping. Now, November 25th, we were at a low and it skyrocketed. Well, not skyrocketed, but went up quite a bit. Like, what's the movement there? 6.81 to 7.08. So almost 30 basis points higher, 3/10 of a percentage point. But now we're kind of coming down. We're getting where we are. Stephen, why are rates dropping? The Fed hasn't cut rates.
Well, they did cut rates.
They did?
Not recently. Recently they did, not today, right? But a few. What was it? How many weeks ago did they cut rates?
It's like a month, man.
Okay, great. So about a month ago they cut rates, and nothing happened.
And nothing happened because it's decoupled.
Or at least not much happened. You can see it right now for your own eyes with the graph in front of you. It certainly wasn't like where it says 2022. Nothing like that happened, right?
No, yeah, it
Um,
wasn't.
yeah, right there. That kind of huge increase right in the middle there. Um, it's I tell you, when the Fed cuts rates like that, it's typically in response to economic conditions, and typically meaning about 100% of the time,
Yeah,
it's in response to economic conditions. But it
the
was a
Fed is
bit
reactive
well, it was
to
a
the
bit
economic conditions.
confusing though. It was a bit confusing why they did it. Um, I mean, okay, we saw that you're doing it. You're saying things are good, but then things weren't good, and then we got bad data, and then they did it anyways, and then nothing really happened in the market, and it was like, anyways. So we have something else to show after this, I'm sure,
Yeah.
on
But
that
anyway,
same
just
topic.
interesting that we've had a slow, steady decline of rates since around the first of the year. That's interesting to me. I'm just going to say that's interesting. Um, and
Well, if you look at the rest of the graph, like I told you earlier, it looks like it's just a slingshot. It's going up and it's going down and up and down and up and down. Um,
and that's the thing. Like, I can't dial this in like to a shorter time frame to really show what it is. But you guys can see right in here. This is what Steve's talking about. Like, there's overall trends, but as far as the overall trend from late 2022, we've been fairly stable overall. We've got peaks, we've got valleys, but we're kind of where we were back over here at the beginning of 2023 ish. So up, down, up, down, up, down, but we're not really making any headways or any, progress. Um, so that's interesting. Interesting. Let's jump into our article. Housing Wire. Do mortgage rates have room to drop lower? You're excited about this one. I know you are. Treasury Secretary Scott Bessent said housing is going to unfreeze in the next few weeks. Steve, are you seeing the housing market frozen right now?
okay, look, that graph I sent you, okay, combined with this really screams a lot.
Can you see that?
You'd have
Kind
to
of hard
zoom
to
in on
see.
it somehow, but that green line, what you're looking at there is our GDP, gross domestic product for our country.
Yep.
That thick blue red line there is generally where the professionals think we're going to be.
It
But
seems pretty
suddenly the
stable.
Atlanta Fed, go ahead.
No, I was just going to say it seems to be fairly stable.
All right. So then suddenly the Atlanta Fed announces this. Look at that green line. That's the Atlanta Fed, and it thinks that we are at nearly -3. I think it was -2.8. Yeah, -2.8%. Not all the way up there at what, 2.8, something like that. What was it? 2 point something.
Yeah,
2
it was over
point. Okay,
two.
low 2.3 maybe. Okay,
Right.
let's say 2.2 to be safe. So they think that not only have we not been making a 2.2% gross domestic product, which is great, that we
That's an
are,
expanding economy
but we're roughly 5% lower than that at
and a
almost
shrinking economy.
negative. Correct. So you don't do that overnight without some sort of eruption of something happening. That
Yeah.
that doesn't happen. So if we are there, then it is just confirmation that all of the numbers we've been receiving were completely and horribly incorrect
Everything.
lies from the government. Basically,
I was about
there's
to say,
no other
yeah,
way
call it
to
what it is.
say
They were
it.
lies.
Yeah, there's no other way to say it. And now that they're coming out, it's either the Trump administration making the Biden administration look bad by lying themselves, or it's the Trump administration showing people what the actual numbers are now that they're not being manipulated anymore. It's one of the two,
Right.
and either way, it's not going to be good for most. Now, for mortgage lenders, it should be Christmas. This should be terrific. This should lower interest rates faster than almost anything can.
Yep.
So we'll see. We'll see what happens. The threat would be stagflation, and then nobody be happy.
Yeah.
Um,
I mean, the thing, like the bad thing is if the economy is shrinking, then we're going to end up with fewer jobs. We're going to end up with higher joblessness. So who's going to be able to buy a house? I mean,
well, then
that
people would
could be a
sell in
thing.
droves, and when they're selling, the price drops, and then the market equalizes itself.
Yeah, but you know what? If so, the thing that I heard today, I was listening to Mike Simonson again, and he's the guy Altos Research that I listen to all the time. And he was talking about back in 20 or last year, no 2022, that rates when they got above six, that's when everything stopped. And so the market's been really kind of had brakes put on it above six. So in his thoughts, we need interest rates to be six or lower. We're still 3/4 percentage point away from that, 75 basis points away from that. If something like this is true, we can make that up in a hurry. But
Brother,
my question,
yeah.
my question to you always is, okay, even if a lot of people have to sell their houses, if we have rates that are all of a sudden back in the fives,
It wouldn't matter. That would push up the house prices
it's going
like
to push
crazy.
up
Well,
the
not
house
fives,
price.
not fives, not fives.
No, even
Sorry.
like I'm saying like 5.9, 5.8.
Nope. I mean, it would definitely get better. You're not wrong.
Okay.
You're not wrong. It would definitely get better. Um, I think we'd need to see 4.5 before we really. So, think about this. In order to have a refinance make any kind of sense for the average borrower, you really want to go 1% or more in your rate. Okay.
Yeah,
And you really want to have some equity in the house. Otherwise, it might be difficult or impossible to do a refinance.
right,
And if
exactly.
and if you have these people that locked in at 7% and now the rate's 5.9, well, that's basically six. So I guess maybe that makes sense. Except that now we're looking at home prices that when they got them at 7, they've come down in price since then for a lot of them. So
Or, best case scenario, they stay flat.
right. So for the most part, a lot of them won't be able to refinance, right? Which is part of why I hated the whole lie. Date the rate, or what was
I
it? What
agree.
guy? Oh, I
Definitely.
hated that. God,
Marry
it
the
was so
house, date the rate. What?
disingenuous.
How many times did you hear a realtor say that shit over the last 3
Oh,
years?
I need to make my mortgage payment this month. So date the rate, okay? Buy the house. And like, damn it, dude. Don't tell people they can refinance when they might not be able to. That's like me telling you, like, you don't need your umbrella tomorrow. It's not going to rain. There's no chance. Oh, actually, there is a chance, right? And you might be wrong one of these days, right? Um. Anyways, that always really bothered me.
Oh man, yeah, and you said it on the show before. Yeah, you've definitely you've talked through that for sure. Um, wait, what are we doing here? I am trying to get over to this other article. Let's go ahead and jump into this finally.
Yes, let's do it. Finally, after Steve's
Um,
finished, let's go.
after Steve's done. Okay, so Treasury Secretary said the housing market is going to unfreeze. Guys, if y'all did not know, the market is slow right now. We've got higher inventory by
Oh,
about 20% than last year.
can
It's
I
still
interrupt
work.
you?
Sure.
One more time. Um, I'm doing coaching and I'm coaching salespeople and entrepreneurs. And one of the stats I ran across while doing some research today, last year, 74% of all realtors did zero.
I am top 26%.
For those of you watching, it's not that shocking. It's usually 50%. But for it to
Yeah.
rise to 74% means in this industry, we're in a recession. There's no question
Yeah,
about it.
it's a real estate recession. I really need to find out the current numbers on how many members of ABOR there are because we've now gone through a few pay
Yep.
cycles
Yeah, but that's
since.
who's left. That doesn't even account for the people that have gotten
Well,
out of the industry and
that's
found
what I'm
another job.
saying. Like at the peak, I think we were approaching 20,000 agents in Austin MLS, which is a little bit misleading because there's probably 30% of those that are investors that aren't actual practicing realtors, and then another 20 to 30% of them that are part time and don't really do anything.
Yeah.
But I think we've shed a lot of agents. The last I heard, we were down to like 14 or 15,000, which is about 20 or 25%. Need to see where we're at
Hmm.
now. Need to see where we're at. But
I
anyway,
know the mortgage lenders
what
have been slashed, man. Like
mortgage lenders are very
75%.
few and far between now. Yeah,
Uh,
yeah.
Hence me not just
Um,
having one specialization anymore. Keep going.
what a roller coaster for economic news in 2025 as we head into March. Many wonder, can mortgage rates dip even lower than we've seen since January 14th? By the way, 14 of the 15 predictive people that usually come out and give their predictions about what mortgage rates are going to happen, 14 out of 15 put mortgage rates. I believe it was around 6.75 by the end of the year. We're at 6.75 now if you're paying attention at home. So Treasury Secretary Scott Bessent said Friday the housing market is stuck, but it will unfreeze in weeks. That's kind of a bold statement there, Scott. It begs
What
the
does he know?
question. Yeah, what does he know? Yeah, it's a good point.
Does he know that we're
For
actually at a negative 5 or 5% less in GDP than we were led to believe? Is that what he knows? Because that would be a
possibly,
really great backup to that statement. Just
yep,
saying.
because that statement was made on either Friday or Saturday. Interesting. Since Trump won, we have said many times that White House economic teams want to see mortgage rates go lower, obviously. Part of the policy plan to get us there is firing government workers. reducing government spending, expanding oil production to fight inflation. For now, weakness in recent economic data has been the big driver of lower interest rates. So that's what you're saying, right? With that giant, massive change in GDP, we're going to expect lower
Right,
interest
right.
rates.
And before people say, yeah, but they're cutting all these government jobs, obviously the GDP is going to go down. Government jobs deduce or deduct or are subtracted from GDP. Government jobs do not add to the gross domestic product because by their very nature, government jobs are paid for by taxpayers.
That's right.
So they take from the GDP. So if anything, it should be going up from this, right? It's
That's how the Biden administration kept GDP high with all, I mean, because they added like 70,000 IRS
when
workers.
but now you're talking about the unemployment rate, not GDP, right?
Well,
And
but if you're
yes,
adding government jobs, it should add to the GDP. That's
well,
what you're saying.
government jobs, in my opinion, should not be considered part of the unemployment
Yeah,
rate.
I got
Um,
you.
in fact, they should be a negative on the unemployment rate.
I would think so too.
I mean, what is it,
Oh,
like
and by the
seven
way,
workers per one government job? I think is what on an average. I figured it out one time. Uh,
yeah,
uh, about seven.
one of the other interesting things that I heard today, and it was somebody in the government because they were talking about all these government employees that are getting laid off, and the guy's like, we have 10 million unfilled jobs right now in the jobs report. I think they'll be fine. So anyway, just throwing that out there. For now, weakness in recent economic data has been the big driver. Do we realistically have legs to go lower? 10-year yield and mortgage rates. This guy at Housing Wire in his 2025 forecast, he anticipated the following ranges. Mortgage rates will be between 5.75 and 7.25. Holy shit. Can I get a job where I can have that big of a spread and be right? That's like a
Yeah,
weatherman.
and he can be wrong too.
Yeah.
Yeah.
That's like a weatherman, dude. The 10-year yield will fluctuate between 3.8 and 4.7. Again, holy crap.
Well, we've been at
Great.
4.2 for. Anyways, keep going.
The 10-year yield wrapped up Friday at around 4.22,
Oh,
landing
I didn't
just
see that. Yeah.
0.42% above the lower end of the 25 forecast. This decline comes alongside another week of dropping mortgage rates, making it an intriguing time for those in real estate because mortgage rates above 7 consistently result in weak housing data.
Yes, I know that it's been at 4.2 because the guy I listen to most about my updates constantly says we got to get above 420. If we get underneath 420, we're gonna have problems with 420. He keeps saying 420, and the eighth grader in me is like every time he says it, I can't unhear it. And he's been saying it for like 8 months now. That 420 is just it's 420 is the ceiling. The ceiling is 420. And I'm like, the roof is on fire. Okay, sorry, keep going. Good, we're good. We're good. It's like this internal thing I haven't been able to share with anyone, so I figured I'd share it right now. Please
Guys,
keep
do
going.
y'all ever wonder why I have to drink on this show?
What does that mean?
Economic data has been consistently underwhelming of late. Okay. And with the 10-year yield peaking earlier this year, the slide from 4.79 to 4.22 has been a relatively common move whenever economic data gets softer. Yet the path ahead could get tricky. It'll be challenging to reach the target of 3.8. This guy's saying he wants 3.8, though. I don't understand.
Well, my target, meaning what he thinks it's going to be, right? Who are we talking
Well,
about now?
he said that his low side was 3.8, but it's almost like he's saying he would like to get down to 3.8.
Let's be clear here. We're not talking about mortgage rates. He's talking
No, no,
about
no,
the
no.
10-year
Just
treasury
the
bond,
10-year yield bond. Yeah, bond
which
yield.
has a lot to do with mortgage rates, but not number for number. So
Yeah, yeah. Um, so without more economic softness or a stock market sell-off that could push funds into the safety of bonds. So if you're not, guys, if y'all don't follow this stuff a lot, stock markets are risky, bonds are safe. A lot of times when you see that
well,
stock
hold
market
on.
sell off, the bonds,
The stock market's tied to companies. The bonds are tied to countries.
and I guess I should have said risky and safe. Yeah. Um, but a lot of times people move their money back and forth between them based on a perceived amount of uh, what's the right way to say it? Like if they're
Market
seeing tough
volatility.
economic times where companies are going to struggle, they're moving it into countries.
So then uncertainty.
Yeah, uncertainty. Thank you. So yeah, keeping an eye
Yeah,
on
that's
these
typically
trends.
why mortgage rates or before 2008, why they got a lot better when there were big times of problem or trouble, is that people would take their money out of the market. You know, well, I got to put it somewhere, so they put it into bonds, and then when the bonds kept getting purchased, then that would push the prices of bonds up, which would push the rates for mortgages down,
Yeah.
and that was a thing. And then 2008 happened, and we just printed a bunch of money with an economic bazooka, as they described it, literally described it back then.
Hmm.
And ever since then, the rest of the world has just lost that huge
Confidence.
appetite they had
Yeah.
for us as a safe haven, that we still are, but it doesn't happen as much like
Heritage
clockwork as it used
species.
to.
Yeah. What's a REIT saying? More renters, even in higher end homes in Dripping Spring. Yeah, for now. Seeing it in my community, I know where a REIT lives, and it's a really nice community. What about younger adults, such as 20 somethings, buying homes in college communities and renting to college students like College Station? Um, you know what, a REIT? I actually have seen a lot of parents that are buying, specifically in College Station. They're buying, what do they call them? Kitty condos.
Kitty condos.
Yeah, and they're not
Yeah.
condos all the time. They're single family homes, but they're buying homes that have like three, four, five bedrooms. So their kid is going to stay in one, and they're going to rent out the other bedrooms to help
Right.
pay the mortgage
If
off.
you
And
do
there's
it
a lot of
right,
college kids who do it.
yeah, if you do it right, you do it exactly the way he described it, and you come up with a rental agreement for your friends. Don't just say, "Hey, we're friends." You know, you come up with the agreement, you have them sign it, and then you can offset a huge amount of the monthly expense with the other four roommates, and then your kid still has his roommates.
Yeah,
Your child is also on the loan as well as you. That's the why we call it a kitty condo, right? It's a
build their credit.
parental kiddo kind of thing. And and then when they leave, they can sell after how many years in college, right? Like 4 to 8.
Yeah, 4,
Um,
5, 3,
and
whatever.
it was 5 for me. I took a victory lap, right? But which I
Five
was
and a half.
happy to do. And but it ends up being a fantastic investment. And
Yeah,
especially if you can do, well, those are kitty condos, but especially if you can do like a duplex or something, man. Those are just,
yeah,
anyway.
that's
Sorry, now
another
I'm
avenue.
getting ahead of myself.
Yeah.
Go ahead.
No, I mean, like it takes us off of this. I know, and this is a yes no question. You've got a product for this, correct, Steve?
Oh, I have a product for almost everything, sir. I'm a
So
broker,
my
everybody. So that means that if I don't have the product and you find the bank that does, chances are I can go to that bank and they will allow me to use that product as well. Now, it's
Yeah,
not true in all cases, but that is true in a lot of cases. So, you know, we like to say brokers are better.
yeah. Case in point, my brother and sister-in-law have triplets. My nephews are triplets. They all went to A&M. My brother and sister-in-law bought a brand new mobile home when they were freshmen. They lived there for 4 years. Actually, one of them stayed there longer because he was in grad school. And so they all had their own bedrooms. And then at the end of the 4 years, they sold it. And I think they basically broke even, which is kind of what you want, right?
Yeah.
I mean,
Yeah.
how do you break even on a mobile home? But you break even after 4 years with
I,
three kids in college.
I
That's a
did a
damn win.
I did a purchase one time for a guy who had been divorced, and he needed to get back on his feet. Right, he had lost everything in the divorce, and he bought an $8,000 fifth wheel motorhome. He didn't have a truck or a car, but he had his friend tow the truck tow it to the RV to a lot. And then he stayed there for like 2 years at like 350 a month, I think. And then at the end of the 2 years, he sold the RV for I'm sorry, for $12,000. So he made a $4,000 profit, which basically offset at least a year and a half. And then the whole time he was saving up, and then he bought a house with me at the end of that. It was awesome. It was such a cool story. Like, if you
Yeah,
want it, you can do it. Doesn't matter what it is.
that's right. So this is kind of giving us an idea of the treasury yields. This goes back to the beginning of 2024. So, man, look at this. The last year and 3 months, the yields have been all over the place.
It's been rough.
Yeah.
It's been rough.
And I bet if you overlaid the mortgage rates on this, they would lag a little bit.
They're not even
But
correlated. If I'm not. I mean, what's the
uh,
years?
I bet they're pretty correlated.
You
Looking at
might be
this
right,
number,
but I mean, those are huge ranges. And what years are we looking at? I can't see the
no,
bottom
this
part
is
of the
just
graph.
2024. This is
Oh,
January of last year, and so this is September of last year. And remember, interest rates went up in August of last year. So there's a month lag, but I bet these are pretty damn close to being correlated. Anyway, today's housing market would look different if mortgage spreads hadn't improved in 24 and 25. Typically, we see these spreads hover between 1.6 and 1.8. Guys, what they're talking about, the mortgage spreads, is remember a while ago on this, I was showing you 6.11 to 7.52. This is a 1.4% spread on mortgage rates. That's what he's talking about. Typically, they hover between 1.6 and 1.8. If we're still grappling with the challenging mortgage spreads that define 2023, we'd be facing mortgage rates a staggering 0.68 higher right now. So over a half a percentage point higher. Holy crap. Conversely, if spreads aligned more with historical norms, our current mortgage rates could be anywhere from 0.82 to 0.92 lower. We do have a large spread right now on those mortgage spreads. Imagine if today's spreads were back to normal levels, we would enjoy mortgage rates below 6%. Right now, today, when they're 6.75, they would be below 6. What a game changer that would be. However, one thing happened in the markets is that spreads tend to improve lately when bond yields are higher and not too much when the 10-year yield is falling. Even with that, the spreads improving since 2023 is vital for housing. I'm going to go back up real quick. These higher spreads here and here, that's leading to that larger yield that he's talking about. I feel like I'm teaching again. Looking ahead the rest of the year, I expect only a modest improvement in mortgage spreads around 0.27% to 0.41% below the average level of 2.54 that we saw in 2024. We've been close to reaching that forecast a few times this year. You can see the spread grew a few times in here, but I'm not going to spend much time on that. So far this year, purchase application data, Steve, you can talk to this, has been slightly negative, but it's performing better than last year. Here's the week-to-week, year-to-year data. 2 flat readings, 3 negative readings. Do you want to talk through that at all?
No, because
Okay.
every single time I've run into things getting better, they then abruptly get worse again, and then they get better, and then they get worse again, and then they get better. And we just had a discussion at the office about this like 3 days ago. We're like, oh, yeah, it's like Friday, I think it was. Things are getting a lot better right now. And then one of the lenders behind was like, until they won't. It was like we just knew. I know we don't want to be pessimistic about it, but at the end of the day, it's
Yeah.
this has been a hell of a roller coaster.
The data behind this, guys, purchase application data, basically, if they're getting more purchases, it's positive data. If it's the same number applications, it's positive. If it's less applications, it's negative.
And right now, this month, we're doing great. We're way up where we're doing really well. But again, we're not ready to start, buying yachts and go.
Better year over year data the previous 2 weeks. Last week, the data was flat, and it's been all over. Case in point, again, this is 2024. That's been the purchase application data. Holy crap. That's all over the place, dude.
It's been a roller coaster. Yeah. And people that are in the industry that aren't, the people that are doing 12 to 20 transactions a year, right? Hey man, you do 12 transactions a year, you can make 44,000, maybe $50,000 a year
as a lender.
Okay. Yeah. And so, okay, right out of college, it's not bad, right? And you're on your own, you're working for yourself, right? Okay. But when you have these kinds of swings, you go from your 12 a year down to like 4. And it's devastating. And then all of a sudden you can't afford to, to eat, right? And so yeah, these have been very, very frustrating to say the least.
Yep. Latest pending contract data from Altos. Mike Simonson, that's the guy that I follow, offers valuable insight into current trends in the housing demand. Last year, after rates fell towards 6, the data line showed noticeable improvement versus prior years. However, as mortgage rates started to rise late last year and have stayed elevated in 2025, it's facilitated a slight but consistent decline in pending sales year over year. So we're below where we were last year. And Mike was talking about that again today. And by the way, guys, everybody that I follow and that Steve follows, you can find these people on X. I still call it Twitter because I'm an old. Like all these people are on there. You can find Altos data and track what we're talking about. We're still showing higher growth versus 2023 levels, but not by much. Housing data gets better when mortgage rates are near 6. And like I was saying a while ago, Mike was saying once they're under 6, that's when it starts to take off. 6 improves, but under 6 is kind of the big
Well,
measuring stick.
thing is, we know that once it hit 6, things got worse. We don't know if it's going to work that way in reverse. I don't
Fair
mean
point.
to be
No,
pessimistic
no, no,
about it,
fair
but
point. And I think I'm going by what I heard Mike say today, as opposed to data that I can show you.
see, here's what bothers me is that I don't believe any of that. I believe that people only shop, and I mean like 95% of them only shop by monthly payment. Okay.
Well,
And
yeah,
yeah, yay, the rate's back at 6, but the prices are $100,000 more in most cases than last time. So now you factor that into the monthly payment. I don't care that the rate's 6. I think it needs to get down to like 5.5 before we really start taking off. But that's just me.
yeah. Well, but think back to what Mark Sprague told us when you and I met with him.
They're making more money so they can afford more. Sure, I
Nope,
got it.
nope, nope, nope. He
Hmm.
said, stop talking about interest rate, stop talking about the price of the home, start marketing what the monthly payment is.
He's not wrong. He's not
No,
wrong.
he's
It's
100%
psychology,
right.
right? I mean, it's just,
Yeah,
yep.
yeah, and it's because of what you just said. People do not buy based on what they can afford.
You know what,
Like,
brother? You just gave yourself the answer to the question you had for me before we started this show.
yeah, but we got to be able to market it, is what I'm saying.
Well, no problem. No
Okay,
problem.
perfect. We're in. And guys, this is showing houses that are in contract. Okay, we're tracking very similar to the last couple of years. 2022 is when it all came crashing, right? But we're tracking very similar to 23 and 24. And I think it's going to continue if interest rates fall to 6 or lower. Personally, my prediction is that we are going to get way up above this because we've got a lot of supply right now, and houses with price reductions are at the highest point that they've been, I think, since 2011. So sellers are like, okay, we got to get it sold. So price reductions are going up, and if interest rates drop, that's what Steve was talking about a while ago. I think the market's going to kind of bump again a little bit. I want to fly past some of this because I'm running short on time. That's not what I want. This is what I was just talking about. In an average year, about a third of all homes typically experience a price cut, which reflects housing market's usual dynamics. As inventory increases, mortgage rates stay elevated. Price cut percentage data has been higher when rates were lower. Okay. And guys, the longer houses are on the market, the more price cuts we have. And houses have been on the market more lately, which is why those numbers are up. For 2025, this guy's forecasting home price growth of 1.77%. That's still a growth, man. Like, that's still increasing prices, indicating another year of negative real home price growth. As inventory increases, mortgage rates stay elevated. Negative real price growth should be in the works for 2025. But the price cut percentage data has increased earlier this year than in other years. So the current forecast looks intact. Again, he's still projecting about a 2% increase in prices. Last week, for the last several years, this year, 33% price cuts. Last year, 31, 2023, 31. So we got more people that are trying to get their stuff sold. And then I'm going to go ahead. This is what I wanted to talk to you about to wrap up on. It's jobs week, but without the jobs opening data, as a report will come out the following week, this coming Friday, which means that the Bureau of Labor Statistics Jobs Friday report will be even more important. Jobless claims data are getting more interesting, as last week had a big spike that wasn't related to federal workers using their jobs. So we did see a bump in jobless claims last week. That's, again, going back to, is this a correction from false numbers that we've been given?
Nah, not for jobless claims.
You don't think?
Well, maybe, but
I mean, I guess there's some big other spikes in there. So yeah, I see what you're saying.
you're only looking at 40,000 or 20,000.
Yeah, that's fair. That's fair.
I mean, it's been publicly stated how many people lost their jobs in the government. It's been more than 20,000, right?
That's true.
So,
Yeah. So the Fed presidents are going to speak this week and next week. Manufacturing data is coming out, unit labor cost data, and a few more reports are coming out this week. But Jobs Friday is going to be the key after a huge move lower in yields. For this guy since late 2022. It's always been about the labor data over inflation. That's interesting. Every time we've seen a good move lower in mortgage rates, it's come with economic growth or labor scares. In 2025 is no different. When the Federal Reserve cuts 1% more at some point in the future, it's going to be easier to get mortgage rates to trend down towards 6%. So the thing that's interesting to me on that last statement is we've seen lower mortgage rates with economic growth scares. That's what you were just talking about with that other graph. Economic growth scares. So do you think this guy knows something?
I think so. Yep. I believe that if that is true, if we have lost 5% GDP overnight due to updated numbers, you may have lost your window, my friend, to get your sellers to give you some extra money.
Mm. Mm. That's tough. Aaron was in Vegas during 08. Oh, where the hell did Steve go? He'll be back. Yeah, the jobless calculation is pretty rough. Pretty rough. Anyway, guys, just kind of overall in a nutshell, and I'm going to wrap it up with Steve. He evidently lost internet or something. The interest rates are moving in a positive direction, but what's causing it? That's the big thing. We haven't had the Fed cuts. We're seeing jobless numbers. Yeah, they can be tough, but going back to what Steve shared with me, this I think is going to be the key driver in all of this stuff. And Steve's back on. This I think is going to be the key driver. We could see a huge swing. Well, huge. We could see a pretty massive swing down in interest rates moving forward. But I guess it's going to be tied more to the numbers, and are the numbers real, or were they real for the last 4 years and now moving forward they're fake?
Oh, no. 2% means everything's fine. We're great. -3% means we have to cut everyone that doesn't need to be here. We're talking massive recession. That's
Yeah,
not. There's no happy news here. This if this is true, this will be the second Great Depression kind of news. I mean, this would be -3% GDP from 2%, and it's all been a lie. Honestly,
yeah,
if it's reported accurately, it could be one of the biggest news events of the century. Right?
yeah.
U.S. government lies to its people for 4 years during recession, only to let them know that it's been a giant recession at the start of a new presidency. I
But
mean,
do you
that's
know the
that's
crazy
that's
thing?
Banana Republic Congo crap.
Do you know the crazy thing? I have
Hmm.
not seen this broadcast anywhere other than Twitter from Zero Hedge, who
Well,
keeps putting
they've
this lit
labeled
guy's body on my damn feed.
they've labeled the Atlanta Fed. So I mean, they are or are not doing it, and I don't know Zero Hedge to lie. They usually post facts, so
No,
they are
they're
they're
actual.
very opinionated, right? He's kind of an
Yeah.
asshole, but he still posts facts, right?
And so
Um,
it'll be interesting to see if this information is actually disseminated moving forward.
Does it show where that graph came from? Did he pull it from somewhere? Or did he do it
It's
himself?
I think he put it together
Oh,
himself. Oh no, blue chip economic indicators and blue chip financial forecast.
seems pretty official.
Yep. Yeah, Aaron's right. What's real is prices. That's it. And yes, the government lies.
Shocking. Actually, it
Shocking.
actually was shocking to me. Um, Not that they lie, because I don't think there's an example of any government in the whole world for all of history that hasn't lied, right? But that they could
How blatant
trick
it was.
an entire economic, well, maybe not trick, because in the office all of us were joking about how the numbers were fake for like 2 years, maybe 3 years,
Yeah.
right? But
Well,
how
we
they
talked about it on this show.
how do you pull wool over someone's eyes with math, right? Like if 1 + 1 = 2, we got to say 2, but you just said it's 11 for 4 years, and no one was like, excuse me, like, are you serious? And then it makes me wonder if anyone did do that, and maybe they were algorithmically silenced. I did. There was a large division of that was shut down recently, so who knows? Who knows? Who knows? The whole
Okay,
thing's
Aaron's
dirty, man.
Rusty. Damn it, I thought this was Aaron. Rusty's saying Zero Hedge is CIA. Dude, don't say
So then you can't
this.
trust anything, is what you're trying to say.
He's
You
saying
can't
it's
trust a single
PSYOP.
thing they're saying.
Come on, man. I was hoping we found at least one arbiter of truth. All right, man.
So Rusty, I've heard Zero Hedge say that the CIA is the most corrupt organization in the world. So,
Well, what do you expect him to say if they're
well,
CIA?
defend them a little bit. I don't know, but unless it's again psyop, right? Oh, that's what they want you to say, bro. Yep, 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 yep.
All
Hey,
right, guys. Next Monday, we're doing the same thing. Dude, we'll find out what happens with everything because this is kind of interesting to track, like what's happening.
wait, I disagree, Rusty. I disagree with you vehemently because Zero Hedge loves Trump.
But do they?
Oh yeah, you should see the way they're writing about him and have been for years. They love him.
I don't. Let's see.
Respond,
Let's see.
Rusty.
He's gonna have a comment, and I can't leave. Like I've got another show that I got to get started. By the way, if y'all are in Dripping Springs and you want to see a Dripping Springs show, go to my Facebook channel.
The problem with
I
me
got to see
defending them
what
at all
Rusty.
now is that he can just say psyop, right? Like no matter what I say,
That's
psyop.
right. Sorry.
And damn it, he could be right. So there's no way for me to say whether he is or not.
And you'll never know if he's wrong.
Rusty, I'll tell you the truth. I work for the CIA, and I'm only doing this show because I have mass influence over many, and I'm able to tell them what is wrong. Right
He
here.
said they're influencers. Damn it!
And they don't pay me enough, which is why I'm
No,
telling you
no,
I
no,
work for
no,
them.
not you.
If they give me a raise,
Zero Hedge is influencing people. That's what he's saying. Damn it! Come on, man.
who's not, who
That's okay.
online isn't.
We're micro influencers, guys. We'll see you
Rusty
next week.
knows that we like him. We
Yeah.
went out to lunch with the guy.
By the way,
He's
we need to
great.
grab lunch
Rusty's
again.
fun.
We definitely need some lunch. Later, guys.